Good day, everyone, and welcome to our webinar. My name is Ramon Escaraga, Business Development Officer, and I will be your host this afternoon. In an ever-evolving financial landscape, it has become increasingly vital to navigate the complexities of investment opportunities. As we all know, not all yields are created equal. The potential returns on our investments can vary significantly based on the various factors such as risk appetite, market conditions, and asset classes. Today, we will explore the fundamental principles of investment and provide you practical insights to maximize the potential of your portfolio, as well as discover various types of investments and different yields they offer. Also, as we dive into the bigger landscape of investment yields, we will also introducing to you a remarkable platform that simplifies the investment process, opening doors to our worry-free future Atram Prime, a mobile-first investment platform designed to create your worry-free future of growing your long-term wealth. Atram Prime aims to simplify the investment journey through the expertise of its fund managers, empowering you to navigate the world of investments with ease. So stay tuned to know more about this new and exciting platform. Remember, it is vital to have a well-informed choices and decisions you make regarding your investments. Hold to that power to shape your financial future. And get ready for an engaging session that is packed with valuable insights and practical strategies designed to help you unlock the maximum potential return of your investments. If you have questions, you may send them as early as now by clicking on the Q&A button below your screen. And before we begin, I would like to inform you that this session will be recorded and links will be distributed and posted on all our social media platforms. Whether you're a beginner to the world of finance or a seasoned investor who wants to stay updated to the latest investment news and strategies, we got you covered. Make sure you subscribe to our YouTube channel, Atram Studio, where you can find a replay of this webinar in case any of your friends are unable to attend. Additionally, we don't forget to hit the notification bell, receive alerts on all your devices whenever we upload new videos. Furthermore, kindly visit our website, www.atram.com.ph, for a comprehensive information regarding all the funds that we provide. You may also access our social media pages by scanning on the QR code found on your screens. We would like this webinar to be as interactive as possible, so we encourage you to send your questions via the Q&A tab below this webinar. Additionally, we will conclude with a brief feedback survey after the webinar, and we hope you can participate to share your thoughts or any suggestions on how we can enhance our webinar series. It is a privilege and a pleasure joining us today, Ira Oraye. Ira Luis Oraye is a fixed income analyst with more than 4 years of experience in the asset management industry. She is a certified financial modeling and valuation analyst and an accredited individual para administrator. Prior to becoming a financial analyst, she was a liquidity and investment management intern for Ayala Corporation. She graduated magna cum laude with a degree of management of financial institutions from the De La Salle University. Also, with Ira, we have our very own Atram's Lodovico Devi Ulpo. Devi has more than 9 years of experience in the asset management industry and currently manages Atram's discretionary fixed income mandates. Prior to this, he was formerly based in Hong Kong as an Asian credit trader and an analyst at the Pan Asia Credit Hedge Fund, covering Asia investment grade, high yields, subordinated structures, and credit market derivatives. He was awarded ranked number 2 in the most astute investor in Asia local currency bonds by the Asset Benchmark Research Awards in 2022 and has consistently ranked on the top 5 over the last 5 years. He is a CFA charter holder, a certified financial risk manager, and a certified public accountant. Also, joining us today is Virgil Banta, head of Atrum Prime, who brings over 10 years of invaluable experience in banking and wealth management. Prior to joining Atram, Virgil held prominent positions at leading banks within the country, showcasing his expertise and proficiency in the industry. His extensive background in the financial sector adds tremendous value to our organization. Hello, Devi, Aira, Virgil. How are you guys doing?
Hi, good afternoon.
Okay, without further ado, the floor is yours.
So, hello everyone. Good afternoon. Today's session will extensively benefit beginners and seasoned investors alike, as we will be discussing numerous yield types and their corresponding intricacies. And we will also be highlighting Atram's investment strategies, which capitalize on yields, and how you can also take advantage of these as an investor to address your own investment goals and objectives. So with this, please allow me to accompany you this afternoon on an investment journey and exploring the world of investment yields. So first and foremost, what is definition of yield? So yield simply refers to the income that an investor earns over time, either in the form of interest or coupon payments from bonds and dividend payouts from stocks and other dividend-paying securities. Such yield will be expressed as a percentage of the original price and or the current market price, considering the estimated income on an annual basis. So next, let us tackle and debunk the webinar title for today. So not all yields are built the same. I guess it is easier to understand this concept through the lens of capital origination and from a capital structure perspective. So governments and companies can raise the needed funding for their expenditures and projects, either by tapping the debt and equity markets. As you can see here on your screen, we have different types of capital, from government bonds up to common shares. And by investing in these types of securities, an investor can receive income through regular coupon and dividend payments. However, it is to be noted that on top of the interest income that you may earn, your overall return will also be accompanied by the changes in security prices. So let's examine the presented securities here line by line, outlining the primary return drivers and their respective risks. So first, we have government bonds. So upon purchasing either fixed rate treasury notes and retail treasury bonds, you will be entitled to receive regular coupons either on a semi-annual or quarterly basis. And in addition to that, the price returns that you will gain will be influenced by the movements in interest rates. So a decline in interest rates resulting from the policy rate cuts by the BSP and favorable inflation expectations will benefit your overall return. And since government securities are primarily influenced by the changes in rates, this thereby exposes you to interest rate risk. Meanwhile, corporate bonds operate in the same manner. However, the main difference here lies in the coupon rate of corporate notes, which reflects the overall creditworthiness of the issuer, as denoted by the credit spread. An improvement in credit quality will boost your overall return, as this will lead to enhanced prices. So meaning prices will go up mainly because of the lower risk premium assigned to the issuer. And by investing in corporate bonds, you are inherently exposed to interest rate risk and credit risk as well. So moving on to preferred, these instruments are viewed as a hybrid security as they exhibit the characteristics of bonds while officially being categorized as equity in the balance sheet. So as a preferred share investor, you will be receiving dividends based on a predetermined dividend rate. The initial dividend rate is commonly based on the benchmark rate plus a corresponding spread, similar to corporate bonds. And moving on to the equity side, preferred and common shares are differentiated by their priority ranking. Remember that preferred shares are given precedence following the capital structure, but they also subject you to subordination risk as compared to debt. Of course, your dividend income may be supplemented by price returns. In particular, the company's shares may trend higher on the back of better earnings growth and credit quality. Finally, we have common shares. Common shares represent one's ownership in a company. So, with these types of shares, an investor will be entitled to voting rights and dividends. While they may be at the low end of the spectrum here, they typically offer the highest potential return given the dividend payouts and capital appreciation from better earnings prospects. And given the higher return, you're also exposed to higher risk as common shareholders will only have rights to a company's assets after all obligations with debt holders and preferred shareholders are settled. So, as a brief review of what we have discussed, think about it like this. So, going through the capital structure is like going through a staircase. Remember, that the higher you are, the higher your risk and return would be. Next slide, please. Moving on, investors can directly purchase government and corporate bonds along with preferred and common stocks, which can be enacted through different investment channels. So given this option, let us look at the benefits and the possible drawbacks that you may encounter should you choose the direct investing path. So the main benefits comprise the following. First is versatility. Direct investing gives the investor the needed flexibility as one can choose the specific security and investment amount to better cater to his or her investment requirements. Next would be the means of expression. Direct investing may be the best path for investors who have a specific investment view with respect to interest rates or to a specific sector or company. For example, one may allocate a sizable amount to a publicly listed stock if an investor has a favorable outlook for this particular firm. Meanwhile, some aspects that the investor should consider would involve first would be a significant capital outlay, wherein direct exposures to certain investment outlets will require a substantial initial amount. But this may differ based on the security, product, and intermediary which will administer your order. Most significantly would be the notable exposure. As the investor has allocated a significant amount in a specified security, one is naturally subject to concentration risk. So this principally pertains to potential gains or losses given your dependence on a single issuer or sector and can be triggered by security-specific or sector-specific events. Next slide, please. Alternatively, investors may choose a different path for their investments by participating in managed funds. So here in Atram, investing is made easier with the support and expertise of your trusted asset manager. As presented here, you may attain numerous merits when you invest in a pooled fund. So first and foremost, we have expertise. Mutual funds and unit investment trust funds are administered by portfolio managers and are supported by investment analysts who are constantly monitoring the market and finding investment opportunities to make the best out of your investment. Second would be diversification. Investing in funds provides you with the needed diversification, which will enable you to benefit from different exposures and withstand bouts of volatility over time. Of course, we also have ease and comfort. So there's no need to travel solo here as we can be of service throughout your investment journey. The research, monitoring, and documentation of your investments are all covered by your asset manager. Next would be access. Through our different funds, investors will be able to enter local and global markets, which may not be readily accessible when done through direct investing. Next would also be affordability. So for as low as 50 pesos, the low investment amounts are primarily designed to further financial inclusion and capital market development. And last but not the least, we also have risk management. Public funds are required to comply with relevant regulatory directives and specific investment mandates. In particular, certain cash levels have to be maintained at all times in order to service potential liquidity requirements, while other funds are limited to certain investment bands and can only invest in specific types of securities. At the end of the day, we ensure that all funds are properly managed within the allowed investment parameters, following the correct strategic and tactical asset allocations. Now, to further add color to these desirable features and how you can step up your investment journey, let me now turn you over to Dev to discuss multi-asset investing.
Good afternoon, everyone, and thank you, Ira, for the introduction. So coming up from the discussion on the merits of being invested in funds as opposed to being invested in direct securities. So let me discuss a little bit of the benefits of taking advantage of looking at different asset classes in the from the lenses of multi-asset investing in the income context. So for multi-assets, so we always like to start our investment approach with risk mitigation. So in this particular slide, these are the factors, or at least the items that we look at to be able to manage risks. First is diversification. Diversification allows the combination of different assets and securities so that one particular investor is not exposed to idiosyncratic risk of a particular issuer or security or a sector. Next is return optimization and the management of risks. We always like to think about our investments as serving one purpose for another, but at the same time working together. In that particular context, sometimes if you hold a balanced fund, for example, in an environment like in 2020, when risks appetite went down, government securities values actually went up. So by combining investment securities together, diversification, you're also able to manage your specific risks by having some risk cancellation to be able to still deliver your investment objectives. Of course, we look at both diversification, return management, and management of risk in the context of asset allocation. So what is asset allocation? Basically, there are two parts. The strategic asset allocation, which is basically a quantitative look back and look forward of what we think about the right combination of assets in a longer time horizon to capture investment cycles. And tactical asset allocation is the ability for the portfolio manager and or the investment manager to be able to express near-term and medium-term views so that the combination of both will be able to manage properly and more in an optimized manner to deliver returns and optimize risk. Next slide. All right. So of course, after looking at risk, you have to look at investment objectives. There are three parts. There are 3 points here. We've written down growth. Of course, everyone wants growth, but of course, with growth there is risk. So again, we start with risk and look at your investment objectives. Second, which is I think the particular topic that we are going to discuss more today, is income, timely and diversified income streams. So multi-asset investing will be able to help you diversify your yield sources. And next, stability. Well, we always like to think that yes, we would like to grow our asset, but I think the more important or most important lesson in finance I've learned is to first protect your principal and then grow your assets. Next slide. So I will discuss three case studies, three funds in particular, to be able to explain a little bit how we look at income in the overall context of active management here at Atram. So first, our flagship total return peso bond fund. So this fund, if you look at the selection, you will see there that most of it, or more than 90% of it, is invested in government bonds. So as Ira discussed a while ago, government bonds have the lowest risk in the risk spectrum. For us, we think of government bonds as allowing us to have the stable source of income, but also having the ability to express our view on monetary policy conditions. So I think Ira already mentioned that, but I'll explain it a little bit in the context. For example, in 2020, when interest rates, we forecasted interest rates to decline significantly because of the risks involved around the global economy and local economy. We went all government bonds, but we went longer duration or longer tenor because the significant drop in yields allowed the fund to have a return of around 10% for the year 2020. Of course, that is only possible because the view of monetary policy condition is very helpful in that type of environment. However, when interest rates rise, of course, the ability of the fund to shift into a more defensive positioning allows us to still protect the principal but have that income mindset. So again, this particular fund is good for investors who are seeking to have a certain level of income, but at the same time wanting to take advantage of the view of the markets and the potential capital gains in the portfolio. So right now, if you look at the portfolio yield of the total return passive bond funds around 6%. But if you look at the yield in the overall context of the year, normally you would assume, okay, I have a 6% yield after tax, maybe I have a 4.8% return. But in fact, the year-to-date return of the fund is 3.8%. Why is that? Because over the past few months, we have been actively managing the fund and being able to return not just the income, but also some level of capital gains as we manage the portfolio more actively. Next slide. All right, so this is our one of our newest product that was just launched, I think the second half of last year, the Peso Diversified Income Fund. So this, I think the main objective of the fund is to deliver income, but in a very diversified way. So if you look at the asset allocation of this particular local currency fund, you have government bonds, corporate bonds, REITs, some common stock, and the management of cash. So why is it important to have a diversified sources of yield? Because again, number one, you want to mitigate your risk. Number two, you want to be able to have that stability over time. And number three, you want to be able to capture the upside and risk mitigation that diversification can offer to you. So this fund allows you access to corporate bonds, REITs, common stock in a fund or unit UITF vehicle. So right now, the portfolio yield of the fund is around 6.2%. Portfolio yield year-to-date return is around 3.15%. I think one thing to highlight for this fund is this is an income-paying fund. So just like the normal corporate bond or government bond, this fund also pays out cash income. Next slide. All right. So apart from those two local funds, we also have this global multi-asset income feeder fund managed by one of our partners. This fund is actually peso denominated. So this is a good way for you to be able to access the global markets by investing in this global multi-asset income fund. So just to go through the usual components, I think this is a combination of both total return and diversified income. So they have high yield bonds, non-agency securitized securities, preferred shares, global equities that are more income oriented. So this is a way for you to diversify, not just in the local space, but also in the global space. So to sum it up, I think there are many ways to access income, but my suggestion for first-time investors, of course, is to diversify your income sources, maybe in the combination of different funds, in the context of maybe buying a direct securities. But again, I always want to highlight, yes, you want income, but make sure you mitigate your risk first for first-time investors. So to talk more about our investment vehicles, I will now turn you over to Virgil.
Hi, Debbie. Thank you. And good afternoon, everyone. At this point, I'm sure a lot of our viewers right now might be wondering, what's the best way to take advantage of these high yield products? Where can I access them? Is there a platform that can offer this and offer advice also? How can I act on these opportunities? Well, this is exactly why we built Atrium Prime. Next slide, please. Next slide, please. Atrium Prime basically is the premier investing platform for on-the-go investors. If I were to summarize our proposition into 3 words, it would be convenient, personalized, and award-winning. So for today's session, I'll quickly walk you through the Atrium Prime experience so that you can start investing simpler and smarter. Next slide, please. First, convenient. On Atram Prime, you can open an investment management account in as fast as 8 minutes. An investment management account is a trust account that allows us to give you, our clients, access to different asset classes, different exposures, all in one account. Opening an investment management account in a traditional institution would sometimes take you days. A few visits to your branch, couple of exchanges for your RM, and a number of forms to fill, even before you're able to transact. And in most institutions, they require at least 1 million pesos to start an investment management account. On Atram Prime, not only can you open one in as fast as 8 minutes, you can open one with just 100,000 pesos. Because our goal in Atram Prime is to get people started in their investing journey immediately. Next slide, please. More than this, our clients will be able to manage their portfolio on the go. So our clients will be able to invest in global and local funds, just like what Era and Devi mentioned. And most recently, also retail treasury bonds. So all in one app. And clients will be able to view their entire portfolio in just one screen. Clients will be able to see how their holdings are doing individually, and also their entire portfolio in a pie, and see how everything is returning them good returns. Next slide, please. Brings us to our second point, personalized. On Atram Prime, we want to give you a personalized investing experience. We understand at Atram Prime that our clients have different needs. They come from different levels of understanding of the market, different levels of understanding of different products, and also different levels of appreciation of technology. And we want to be there for all of our clients at any given point in time in their investing journey. So what we did was we assigned dedicated client advisors to each of our prime clients. So our clients have access or direct lines to these client advisors. They can call them by phone, SMS, Viber, WhatsApp, email, you name it. There's an actual person assigned to each of our clients so that at any point in time, our clients can consult, can ask anything from the app, transactions, products, or whatnot. And if there's a question that our client advisors won't be able to answer immediately, no worries. The whole Atram team is behind them to give you the answers that you need, to give you the guidance that you need. Because our proposition doesn't end at the app, doesn't end at the client advisor. We give you the whole experience. Next slide, please. Of course, we also want to give our clients a personalized investing experience in terms of their portfolio. So what we do in Atram Prime is we get to know the risk profile of our clients. We ask them why they're investing, how much they can tolerate, how long they're looking to invest, and the level of knowledge that they have. What we do is we take that information to be able to give them tailor-fit portfolio recommendations. Next slide, please. So we've provided a few of our clients, or a handful of our clients, with portfolio recommendations based on their risk profiles. And we can do this for all of our clients who are interested. That's how much we care about your investing future. Next slide, please. The third proposition, award-winning. So Atram Prime is very, very proud to be part of the largest independent asset manager in the Philippines, backed by more than 100 years of collective investment experience. And Atram is the home of award-winning fund managers, and therefore is the home of award-winning funds. Next slide, please. Atram Prime, we offer our award-winning funds, our UITFs, our mutual funds, and our retail treasury bonds. So we have over 20 UITFs and MFs, and we have currently 5 retail treasury bonds covering 3-year, 5-year, 7-year, and 10-year tenors. And we're looking to add to that suite even further. And maybe just to share with you some of the funds that we carry and some of the focus funds that we have been looking at over the past quarters, move on to the next slide. So One of our focus funds, or two of our focus funds last quarters, are funds that are concentrated on the short to medium term fixed income side. The Acham Total Return Peso Bond Fund, which Debbie talked about earlier, and the Acham Peso Money Market Fund. We also have on the next slide three of our multi-asset funds. The Acham Peso Diversified Income Fund was what Debbie talked about earlier as well. And we also have a Global Multi-Asset Income Feeder Fund and a Global Dividend Feeder Fund. These are all income-paying funds, and these are just samples of what we carry. There are over 20 of these on our platform. Next slide, please. All right, so what makes investing better with Atram Prime? Well, we're proud to say that Atram Prime is the only app in the Philippines to give you a dedicated, complete, and premier investing experience. Traditional institutions make it hard for you to track your investments, and online brokerages often don't offer the dedicated support that you need. And lastly, most platforms don't give you access to the kind of products that we have here in Atram. Maybe if I could just run you guys through some of the unique service propositions that we have. So again, on Atram Prime, you can open an investment managed account in 8 minutes. We offer income-paying funds, and we offer retail treasury bonds as well. And I want to take note, we offer retail treasury bonds on the secondary market. So you can go in and go out anytime that you need to. There's no lock-ins, and you don't have to wait for primaries to be able to invest in bonds. We offer dedicated client advisor for each of our clients. You can easily track and manage your investments in one place. And you can get our portfolio recommendations if you want. So that's the Atram Prime experience. Now you might be asking, how do I open an account? Well, it's very easy. If we move on to the next slide, becoming a Prime member is very easy. We can condense it in 4 steps. So after downloading the app, you just need to go through our onboarding process where you, number 1, determine your risk rating. Second, you provide your personal information and employment information. Then you'll undergo our EKYC process where you'll be verifying your identity. You take a photo of your ID and take a video selfie of yourself so that we know that you're an actual person. And you sign your investment management account. The following stages are easy as well. Funding your account can be done in 2 ways. Next slide, please. The first way is via bank transfer, where you just have to be able to give the instruction to us or give the deposit instructions to the Atram Prime app. Tell us how much you're going to be moving to your Atram Prime account. See the instructions on your app, and then you can just copy that information to your other bank's app and make the transfer. Another easy way to fund your account in Atram Prime is through Bills Pay. Next slide, please. Funding your account through Bills Pay is very easy. You can do it through BPI, BDO, or Metro Bank, where, again, you just need to give the instruction on how much you're going to be transferring to your Atram Prime account, and then fulfill it on your other bank's app as a biller. And then you're ready to invest. And investing is as easy as 1, 2, 3 as well. You just have to, next slide, please. You just have to tap the product that you want, press buy, and that's it. So, guys, very happy to share what we have here. It's an awesome product, and the product made just for you. Can't wait to have you on board. And now, I'm handing it over back to Ram.
Thank you, Virgil, Devi, and Aira for that wonderful presentation. And I'm really excited to answer some of our live questions later. But before we proceed with that, we are pleased to announce that Atram has won awards for numerous major awarding bodies for Best Investment Solutions Provider, Most Innovative Fund Management Firm, and Most Innovative Fund Offering Company. And just recently, Atram has won Asset Management Company of the Year, highly commended from the Asset AAA Sustainable Investment Awards 2023 for institutional investors, ETFs, and asset servicing providers. These recognitions serve as a testament to our unwavering commitment to creating cutting-edge investment solutions. We believe that our unique approach to manage assets and funds has assisted our clients in achieving their financial goals. As a result of our team's experts and unwavering pursuit of excellence and innovation in asset and fund management, we are dedicated to continue to push the limits of what is feasible in the investment industry. We appreciate your continuing confidence and support, clients and partners. And at this point, may we call on Virgil, Devi, and Aira so we can answer our live questions from our audience. And I think for the first question we have here is for Devi. When evaluating different investment options, what should I consider besides the potential yield? Are there any factors or metrics that can help me assess the overall value and sustainability of an investment?
Thanks, Ram, for the question. So first, of course, the investor needs to look at his own investment horizon and liquidity consideration. So for example, of course, if you expect shorter term, then it needs to, of course, fit that objective. So next, in that context, of course, you also have to weigh your own risk appetite. For every investments that we do, we always look at two factors. Number one, our fundamental outlook for the markets in the context of that particular securities. For example, if you're buying government bonds, you have to look at monetary policy conditions. So if we expect inflation to go down in the next 12 months, then locking in interest rates longer term may make sense. If you're buying common shares in the context of a dividend income, then you have to have that expectation of better earnings condition or better economy for that particular common stock. And then, of course, yeah, apart from the outlook, you also have to look at valuations in general because you might be buying overbought securities and you might experience capital loss. So again, management of risk and fundamental objectives is key to having that effective investments process.
Well, I guess I have to agree with you, Devi, when it comes to management of your investments. And for our next question, I think Virgil will be able to answer this since when it comes to management of your investments, I think Atrium Prime will be the proper platform for that. Virgil, are there any limitations or restrictions in terms of the types of investments available on Atrium Prime? And can users access a wide range of asset classes or investment options such as stocks, bonds, or mutual funds? And lastly, what is the minimum for the Atrium Prime to start with? Thanks, Devi. Thanks, Virgil. Sorry.
Thanks, Ram. So, good question. So, on the Atrium Prime side, currently we offer all of Atrium's peso-denominated mutual funds and UITFs. The both income-paying funds and non-income-paying funds of Atrium are there, and in the 23 MFs and UITFs alone, you get exposure to global equities, global bonds, local equities, and local bonds, and also different thematic funds as well. Now, is there a limitation to what we're doing? Well, we've added bonds to our plate at the moment, and this is the power of the investment management account. So we're not only offering Atom products anymore. We are also offering retail treasury bonds. The power of the investment management account, I can say, is a bit limitless in that regard. So you can guess where this is going to go. I can't say anything at the moment in particular, but with all the things that we're doing, I guess you'll be able to kind of infer what we're trying to do here. Now, as for the minimum investment amount, like you mentioned, you can start with as low as 100,000 pesos. 100,000 pesos is actually the BSP regulatory minimum to open an investment management account. In other institutions, they still peg it at 1 million to open an IMA. But in Atram Prime, we make it possible for people. So we pegged it at 100,000 pesos. Hope that answers the question.
Thanks, Devi. Thanks, Virgil. I've been completely
No problem, Ram.
Devi and Virgil. I guess I've been with two handsome men, but I would like to invite Era to answer the next question here. Virgil already mentioned about investment options, no? But for Era, are there any specific sectors or industries that tend to offer higher yields compared to others? And how can I identify these sectors and make informed investment decisions based on their potential yields? Era?
Thank you for the question, Ram. So, based on our analysis, REITs and several common stocks under the utilities and telecommunication sectors are among the highest yielding investment outlets currently. So, these securities denote yield ranges of about 6 to 9%. Of course, on our end, we are prioritizing security selection, mainly focusing on issuers with high credit quality. So for REITs, we prefer issuers with stable occupancy rates and long average lease expiries. And for utilities, such as the power giants here, we are banking on the defensiveness of the sector and the sustainability of their cash flows. Meanwhile, for telco entities, we expect them to further benefit from the continued take-up in the broadband and the enterprise space, and also from the recent tower sales that they conducted since last year, which may further boost future dividends. Thank you.
Thanks, Era, for that concise answer. I guess we are really offering Atram Prime, no, as the overall platform. But I have a question here for Virgil. As a mobile-first investment platform, how does Atram Prime ensure the security of users' personal and financial information? What measures are in place to protect against potential cyber threats?
That's a good question, Ram. Well, the Prime mobile app is actually developed using cutting-edge and state-of-the-art technology to ensure both our performance and security. So we use industry standard encryption that's also combined with users' devices' biometric features to ensure the authentication of identity. We've also implemented various practices and tools such as secure code scanning and web application firewalls to ensure that our app is hardened from the point that it's developed until going live to production, as well as on a BAU basis. Further to this, we have periodic exercises to test and make sure that our apps stay secure and that we're updated for any of the different attacks that the black market does.
Thanks, Virgil. A great answer. I guess the confidence of our clients will be highly appreciated with those answers. No, but before we move on, I'd like to ask Devi to go back to the market and there's a question here about the fixed income assets. Now, what features of fixed income assets can affect the yield on bonds? And how can I assess these factors and choose the best course of action to optimize my returns?
Thanks, Ram. So, of course, for the features of fixed income securities, you also have to look at the combination of the investment instrument, which is the issue, the structure of the note. Of course, 1-year bond is different from 5-year bonds, different from 10-year bond. Whether what bond you bought, is it a government bond or is it a corporate bond? Of course, for corporate bonds, you need to have some level of compensation relative to where government bonds are currently trading. Also, you need to look at what's the protection that particular instrument can provide to you, whether they're secured instruments, unsecured, whether they're perpetual note or preferred share. So really understanding what you bought or the instruments that you are looking to express your view on. Then, of course, in the overall context of what you bought, you have to look at the issuer. Is it the government, or is it corporate, or is it something else? Or maybe you can also look at sector conditions. I think Ira already discussed a little bit what sector we favor and the evolving macro conditions. I think over the last 3 to 5 years, macro conditions have been a very important driver of investment returns because at least over the last 3 years or last 4 years, interest rates have been very volatile because the central banks have been, active policymakers nowadays.
Thanks for that, Devi. I think I have a follow-up questions alluding to the in the last 3 years we have a volatile market, but for the next few years, no, for the next 18 to 24 months, you expect Philippine interest rates to drop? And if these investments that you mentioned earlier will have an effect to the US debt ceiling issue right now with the in the US, can you share some insights on that, Devi?
Yeah, of course. For the US debt ceiling, at least where we can they already have a little bit of resolution to push down to push back the negotiation. So at least there will be at least no anticipation of a US default. So there will be no volatility coming from that. So right now at least the market is expressing that the optimism that that particular factor is already resolved. Whether that will come again in the future, we have to look farther down the road now. When it comes to interest rates locally, I think over the next 18 to 24 months, the broad expectation is that inflation will not stay this high for long. It will normalize down the road. The VSP, in fact, mentioned that inflation or the headline inflation rate may go below 2% by January 2024. Because of that view, we think that monetary policy needs to adjust. Therefore, because of that expectation, interest rates will need to adjust lower. So I think it's a perfect time to buy government bonds and bond funds.
And of course, where do
Check your prime.
where saan pa ba sila pupunta, 'di ba? Here in Atram Prime. I guess for the next question, I'll ask Virgil again. Virgil, magkano para maka-open ng Atram Prime ulit? 100,000 ba ang kailangan ko to open an Atram Prime?
Yes, so to open an Atram Prime account, we need 100,000 pesos to fund the Atram Prime account. But once it's in, I just have to clarify, Ram. Once the 100,000 is in, you can actually spread it out to the different investments already. We have funds with as low as 50 pesos minimum, as low as 100,000 pesos minimum. And for retail treasury bonds, our minimum lot sizes are 50,000. But you have to first be able to fund your Atram Prime account with 100,000 pesos, which again is the BSP regulatory minimum for investment management accounts.
Thanks for that, Virgil. And for our last question, I guess this is for Devi or Ira. You can chime in here. In the current market situation now, how do you know when to switch your funds from short-term assets, such as TD with high rates, versus medium-term funds?
Of course, thank you. So I think that is what the Atram Total Return Peso Bond Fund is doing. So really active management. We don't just buy bonds and collect income, but we express our view of the markets through our two-curve selection. So maybe I can talk about it in the context of the last 3 years. No? So in 2020, when we expected interest rates to drop, of course, given that expectation, we opted to buy longer term bonds, 10-year, 15-year, 20-year bonds. In the past 2 years, 2021 and 2022, interest rates have been rising because inflation just shot up. So the best way to avoid that interest rate adjustment is to go shorter tenor instruments. So from long go short. That's why over the past 2 years, we are able to protect the portfolios from that massive adjustment in interest rates higher, which led to price losses for bonds in general. For this year, we think that the expectation is really for that fundamental factor that led to the increase in interest rates to decline, which is inflation. Inflation, in our view, will decline over the next 12 to 18 months, maybe in the next 24 months. We actually expect that there might be a sharp decline in interest rates in the next 6 months. So how do we know? Of course, it's a combination of our proprietary research. That's why ERA is here. That's why our traders here, our investments analysts are here to help support finding that little bit of edge in the markets, and also looking at technical analysis to understand whether bonds or yields in particular are overbought or oversold. By combining both and our active management, we're able to anticipate whether what direction interest rates will go. So for now, I think safer to assume that in the next 6 to 12 months, there is expectation of a decline in inflation. So buy your medium term to long term bonds in prime, or buy the total return peso bond fund, and we can manage that for you.
Definitely the Atram Peso Total Return Peso Bond Fund is really a guide for me. Personally, I invest in that fund, and really I'm really happy with the current standing of the portfolio. But for Ira, I guess here's a last question, before I let you go, guys. How should the fixed income investor navigate that elevated inflation environment? An elevated inflation environment. I guess this is where you could guide our fixed income investors. If you have any tips to share for our fixed income investors, Ira.
Of course. So investors can actually navigate the different economic cycles and different interest rate environment by investing in managed funds. So these funds provide diversification, and also these are actually managed well by our portfolio managers, and this will give you the needed yield and income that you may require for your investment journey.
Thanks, Ira. Maybe Devi could also chime into the last tips that you could share with your fellow fixed income traders.
Sure. Of course. I think in the next it's question of whether what your expectation will be. No, of course. The general expectation now is for inflation to drop. Therefore, you can now start to move your shorter bonds to medium term bonds, longer term bonds. But of course, the markets do not move in a straight line, right? So if there is another hopefully not another driver of inflation upward in the second half of the year, we have to be very agile and adjust our portfolios. So we don't lock ourselves or marry, what's the 12-month view or 2-year view. If something happens that is very fundamental, that is where active management comes in. We take risk off the table and go shorter term. So if we see inflation's flaring up again, then definitely that may be a cause for concern, but that is not the base case for the next 12 months. So again, active management, being very agile and making sure that we are able to navigate the portfolio in different economic and market conditions.
I guess this is a good time to top up on my Atrap Total Peso Diversified Income Fund via the Atrap Prime, right, Devi? Right,
Of course.
All right. Again, thank you again for sharing your insights about the market, especially in the yields, and of course sharing your insights, Virgil, about Atrium Prime. Again, we appreciate you taking the time to join us today. Thanks, guys. Again, for Atrium Prime provides access to a wide range of investment options, allowing you to customize your portfolio based on your goals and risk tolerance. With a commitment to a long-term growth, Ashram Prime's expert fund managers such as Devi employ proven investment strategies, guiding you towards building wealth that withstands the test of time. Watch this video to learn more.
Good day. Atram is the leading independent asset and wealth management company in the Philippines. If you are interested in investing in Atram Prime, download the app in the Apple App Store or in Google atrum.com.ph to know about Atrum Prime. If you have other questions, you may fill out the contact form on our website or send an email. We hope this helps. Thank you.
Whether you are a novice to the world of finance and investments or a seasoned investor who wants to stay up to date with the latest investment news and strategies, we got you covered. Make sure to subscribe to our official YouTube channel, Atram Studio, where you can find a replay of this webinar in case any of your friends are unable to attend. Additionally, don't forget to hit the notification bell to receive all the alerts on your devices whenever we upload new videos. You may also access our official social media pages by scanning on the QR code found on your screen. Finally, we kindly ask you to complete the survey at the end of this webinar as we value your feedback on today's topic. On behalf of everyone at Atram, we express our gratitude for your participation and we wish you and your loved ones a continued health and safety. Have a wonderful afternoon, everyone.